Alrighty, y'all. What is going on? What's going on? If you don't know, now you do know. You're officially tuned in to a very special edition of the HFWB podcast series. This is your host Clifton Pope, and with me today, I have a very special, knowledgeable gentleman who's going to be breaking down so many things right now. And let me just say it like this. There's two things, we all heard this before. There's two things that are certain in life. That's death and that there's taxes. One of the things that we're going to talk about today is obviously taxes, with it being tax season and everything. There's so much that people don't understand about taxes and like all the loopholes around it and stuff. And it's a learning process even for me myself. Even when I hear things like in the tax world to where it's like, oh, you can do this. I didn't even know that. I mean, it's a learning process every single day. And with that being said, I'm going to bring in this gentleman who can break it down better than anybody that I know. As a matter of fact, he has his own CPA tax firm. He deals with the IRS on a regular basis. He deals with LLCs, nonprofits, you name it. He's here to basically help your business get out of the trouble with the IRS because that's the last thing we need. With that being said, I want to welcome everybody, Mr. Joe Hopkins from Hopkins CPA Tax Firm to the HFWB podcast series. Joe, welcome aboard. This has been long overdue, my friend.
Yeah, thank you, Clifton. I appreciate that. I'll send your $100 bill in the mail for the thankful introduction there. So
No, of course, Joe. And with that being said, for everybody who's listening to the HFWB podcast series, and give them a little bit of your background story, how you got involved with, of course, being an accountant, having your own tax firm. Give us the whole background story, Joe.
yeah, just give you a little start from scratch. I've been a CPA for 25 plus years now, and
Right.
I've been a former CFO for various institutions. And so I know the business side of the equation. Have my CPA firm here on the south side of Corpus Christi. We probably do about 10% of our business here in Corpus Christi with clients. Probably 40% of my business is statewide throughout Texas. The other fifty
Mm-hmm.
percent is scattered throughout the nation. So I help people all over the nation,
Mm.
especially with today's technology. Here we are zooming, right? Well,
Yes.
I zoom with my clients all over the nation. So you don't have to be in the same town anymore to get good tax help. And so we kind of pride ourselves on. I have a team of former IRS agents that also work very closely with me. We probably have at least 150 years of former IRS agent experience on our team
Mm-hmm.
for any complex situations. So what do I cover? We cover all aspects of CPA firm stuff, preparing taxes, tax planning, setting up LLCs like you mentioned, and getting people. Sometimes people with small businesses, it's advantageous for them to think about a different tax structure, and that can be turning that LLC into a different entity structure, whether it be an S corp or something else, to mitigate those taxes along the way.
Mm-hmm.
One of my mottos is, the IRS deserves their fair share of taxes, but that doesn't mean you have to tip them extra along the way. So,
Mm.
you
I
know,
like
so
that.
yeah, so we just kind of work toward getting that base bill in there, and try to use the tax loopholes to everybody's advantage. There's no smoke and mirrors about it. There's 126,000 pages of tax law, so we're just using those laws to the client's advantage along the way. In addition to that, we do specialize in IRS tax resolution, and so a lot of people may say, "What's resolution mean?" Well, people with large tax debts, especially $20,000 or more, that owe the IRS, and that does sound like a lot, but believe me, Clifton, that's kind of the tip of the iceberg for some of especially the business owners out there that I
Right.
usually run across people with 50, 100, $250,000 in payroll taxes that is due, with IRS. And
I was gonna say, Joe, it seems like 100,000 above is kind of like the new norm as far as like owing To the IRS, I feel like, especially like you alluded to, with all these different big businesses and stuff.
Yeah, yeah, it can be really crazy. And you know, the main point I want to get across today, Clifton, if I don't get across another point, is I want people to feel at least like they're not alone out there in the world if they're facing any IRS tax debt issues. And let me expand upon that a little bit,
Hmm.
because every person that I talk to, or just about every person that I talk to, is when they talk to me, they feel like they're unloading their burden to me, and I love to see that burden unloaded, because let's say they got a $25,000 tax debt, or they haven't filed tax returns in 4 or 5, 10 years, maybe 15 years, or maybe never.
Yeah.
They feel like they're the only person in the world that has this problem. And the thing I want to get across to people is that there's 26 million people in the United States right now that have uh, not filed tax returns in a very long time, or have a very large tax problem. And there's only 260 million adults in the United States. So that's one out of every 10 people walking down the road has a very similar story to what they're hearing. And the people that call me that are very embarrassed about their situation, they're embarrassed because they haven't been able to tell their best friend. They may have a friend for 20 or 30 years, their best friends. They don't even tell their best friends about it because it's that
Mm.
embarrassing. And so I just want to let people know
No,
they're not alone out there.
no, it's a very touchy subject when you think about it, Joe, because nobody never plans to be in debt in general. And then on top of that, owing money to the IRS, which is a whole nother issue. Nobody never plans it or wakes up in the morning like, I feel like I want to get in debt with the IRS. I mean, things happen and sometimes it doesn't work out in your favor, but as you alluded to, Joe, you're not alone. There's someone probably within down the street who's dealing within the same issue. You may not even be aware of it. For that person, Joe, who for some odd reason is feeling like, why is the world against me? Why do I have all this debt? What are some tricks you could give them as far as like the loopholes you were alluding to get that IRS tax resolution that you're describing?
Yeah, very very good question. Each case is very unique, so there's not one solution that fits all equations. And so I'd be happy to talk with anybody for a free consultation. Just I shoot them straight. I don't sugarcoat it, and we can talk about that later. But what I do see a lot of, let's focus on small businesses for a lot for
Right.
the time being. A small business, generally what I see runs into a problem is they get a lot of 1099 contractor income or whatever else. People that are W-2 wage earners generally don't get in very large tax debts. But the people that generally have larger tax debts are uh, contractors, attorneys, doctors, believe it or not, anybody that receives 1099 income, Uber drivers, anybody out there that is getting 1099 type income, guess what they're supposed to do during the year? They're supposed to make estimated tax payments, because you're not having taxes taken out of your 99 years, and people aren't diligent enough to send in monthly or quarterly estimated tax payments during the year. They get to the end of the year, it's time to file their taxes, and lo and behold, they have a $7,000 tax bill. They can't afford to pay it. They haven't set aside money, and so they don't pay it. And next year rolls around, and guess what they do? They're afraid because they didn't pay the tax bill the previous year. So what do they do this year? They don't file. They don't file the following year. And then the next year rolls around and they don't file it
And it
again.
just adds up. It all
And
adds up. You're gonna have to pay it off eventually.
yeah, I mean, it could be 7,000 plus 7,000 plus 7,000 plus underreporting penalties plus a lot of stuff. And a couple of years of that, I mean, it could, penalties and interest, and it could easily, rack up to be $50,000 before you turn around. And so it's just a matter of what I want to get across to people is that there's a solution. And what we do, there's a policy code out there that I want everybody to be aware of, and there's no secret about it. This is with the IRS. It's policy code 5-133, and what that basically says is, if you have not filed in, say, 15 years, the IRS kind of draws a line in the sand, and they say, look, to be compliant, let's catch you up to speed on at least the last 6 years of returns. They realize people don't have 15 years worth of records, right? That's just way too far out there. So generally, if there's not a revenue officer assigned to your case, then we can usually solve your case by focusing at least getting you compliant on the last 6 years. If somebody says, oh, I filed everything but the last 3 years, okay, let's focus on the last 3 years. You know? So it's just that simple. And once we're in compliant, I tell my clients all the time, look, if I called the IRS today representing you, the first question they're going to ask me, is your client compliant on all the tax returns? And generally the answer is no when they first call me. So what we do is we get them compliant. We have the software that can go back a decade or more if need be on tax returns. Sometimes there's reasons that we might want to amend older tax returns. We catch them up on the tax returns. We get them all up to speed, and then we kind of deal with the IRS. Because if I call the IRS first, if the client calls the IRS first, or if I call the IRS first, they're going to say, your client's not compliant on tax returns. Now you have 30 days to finish 6 years worth of tax returns, ready, set, go. And we don't want to be under that pressure. We want the client, I mean, we're going to finish the tax returns as quick as we can, but we don't need an extra deadline thrown in there. So
Yeah.
where we work with a lot of our taxes clients on.
That's very very interesting. It's a process at the end of the day, but it can get done. I want you kind of elaborate, Joe, as far as like on the W-2 versus the 1099 a little bit for those who are listening to the HFWB podcast series and have no idea what you're talking about.
Right. Yeah, I'd be happy to. That's a very good question. Sometimes I kind of get into the meat of the material and think about the logistics of it. As most people out there go to work for employers, they are what they consider W-2 wage earners. At the end of you work for the employer all year long. At the end of the year, you get a W-2 form that says you made this much taxes and this much taxes was taken out of your paycheck. You file that with your tax return, and hopefully the wages taken out of your paycheck was similar to what you owe at the end of the year. Sometimes it's less, sometimes a little more. 1099 wage earners are, like I was alluding to earlier, let's take a landscaper, for instance. He has his truck, he has his crew of people with him. He may have a crew of 5 people that go out, has a sole proprietorship landscaping business. He goes out there, collects all these payments during the year from commercial builders or individuals and whatever else. And this money that is sent to him at the end of the year, other businesses that send him money, let's say that there's a lot of, he does work for a lot of commercial industry and landscaping, right?
Right.
ABC Building pays the landscaper $1,000 a month to do the landscaping work. Well, at the end of 12 months, he's going to get a 1099 for $12,000, right? $1,000 for
Yeah.
How much taxes was taken out of that $12,000? Zero, right? So now he owes taxes on $12,000, and unless he's been saving some money for taxes or he's been making some estimated tax payments, and there's a link that you can send to the IRS along the way, you get to the end of the year, oh my gosh, now I have a big tax bill because I haven't sent in any money to the IRS. Let me see if I can shorten this up also. There's a lot of small business owners out there that I typically say when you're making about more than $40,000 or $50,000 in self-employment net profit, then we want to think about doing a different entity structure for them to save self-employment taxes, because a sole proprietor, and I don't want to get into the logistics too much and too deep into it, but local
That was actually going to be the next question I was going to ask you, Joe. I wanted to actually have you break down the sole proprietor, the LLC, S Corp, C Corp, because a lot of people don't understand the difference between all of those things. For
okay.
those who are listening and who have no idea who've ever heard those terms before, please, by all means, break them down, Joe.
Yeah, absolutely. No, that's a good segue into it. So, the typical sole proprietor, you can go down to the courthouse here and file a doing business as, and I think it costs $27 down at the local courthouse. You don't have to file with the state. You don't have to do anything. You can start up your, Joe Hopkins landscaping service, right? And you're doing business, and then you collect money during the year, and you file your taxes. Very simple. If you want to have some light, and I throw out a disclaimer here, I'm not an attorney, but we do set up LLCs all the time. If you're getting involved with, a partner or something else, then I advise some legal advice along the way. But we do set up LLCs in order to have some liability protection there for the clients. What does an LLC do for the clients? Basically, it sets up a layer of protection for the clients so that their personal assets can't be sued. So to
Right.
speak. And again, get some legal advice for some more details there. But so a lot of people set up LLCs to protect themselves from a legal standpoint. With the Secretary of State, we set up these LLCs, and as long as your name that you're wanting your LLC business is not very similar to something else that already exists, we can get that name for you. So it might be Hopkins Enterprises LLC, and under Hopkins Enterprises, I could have 5 different businesses running. I could have a landscaping business, I could have a contractor business, I could have an ice cream truck if I wanted to, all under Hopkins Enterprises. But that name just kind of gives you some, once it's registered with the state, then nobody else can take that name from you. So if I had Hopkins Enterprises and just a sole proprietorship and somebody else registered with the state, Hopkins Enterprises LLC, their state registration overrides mine, and they could come to me later on and say, you can't be using that name because we've already registered ours with the state. That's very rare that happens, but
Right.
that's a lot of reasoning why people, when they start growing, they want to especially protect that name with the state. So you kind of expanded upon what are the differences between sole proprietorship LLC and S corp and whatever else. So once you register with the state, with an LLC, and there's some other entities that can be registered. You can have a professional corporation, you can have a limited liability partnership and other partnerships, and there's quite a few other structures that we won't go into the details of. The most common that is set up is an LLC. So we set up the LLC, and then people come to me all the time and they say, Joe, my friends have set up an LLC. I want to do that, but I've also heard S corps are good too from a tax strategy standpoint. Which one should I do? Well, it's a misnomer out there because an LLC is set up with the state of Texas, right? That's
Right.
an entity selection. Now, how do you want to be taxed with the IRS? That's a separate issue. So what we do is we take the existing LLC, and if they want to be an S corporation, and we determine if an S corporation is best for them, then we select an S corporation status election. So you really have both. You have an LLC set up with the state, but it's taxed as an S corporation to save you potentially lots of taxes with the IRS.
Okay.
If you have a one-person membership LLC and you don't select the S corporation, then it defaults to be what they call a disregarded entity, and that flows through on your Schedule C of your personal 1040 tax return. If we do elect the S corporation, then we can that's a separate tax return, which has the advantages to giving an individual tax rate flows through to them personally. So I know that's a lot of information there, and we'd be happy to clarify it some more if anybody had any detailed questions.
No, yes, it is a lot of information, but at the same time, it all depends on which structure works best for you based on your exact situation at any given moment. And yes, people should definitely, most importantly, do more research into these things before they actually jump into it and actually file for the DBA, file for the LLC, file for S corporation, C corporation, whatever. Just do your research is what I would recommend for everybody who's listening to the HFWB podcast series and heard everything that Joe just broke down. Do some research and definitely, if necessary, even reach out to him for more clarifications, which we'll get into that information in just a moment. Joe, I want to ask you this because I know you've probably dealt with a bunch of doozies within dealing with IRS tax resolutions. Is there a certain situation with a particular client, which you don't have to name, of course, that stuck out to you to where it was like, wow, this was even a challenge for myself within all the years of experience that you've dealt with?
Yeah, that's a very good question. Several come to mind, but the larger dollar amount cases don't necessarily have to be the more complicated cases.
Right,
Uh,
right.
there's there's one case that we're currently working on right now, and it's out of the Houston, Texas area, and of course the name
Mm-hmm.
will remain unnamed. But basically, there's a person that's running the company that has approximately $300,000 of personal tax debt, and the business has probably at least $300,000 to $500,000 of personal of tax debt related to the business because of unfiled 941 reports. And what 941 reports are the payroll tax quarterly reports that are due to be sent into the IRS. I highly, highly suggest, even if you have a small business, have a payroll service such as ADP, who I partner with, file those taxes for you. I can do payroll taxes on the back of a napkin. I can tell you the exact tax rates and everything. I
Mm-hmm.
have ADP do my taxes because if you just mess up one number, then you're hanging
Throws
yourself
everything
out there.
off.
It, you just now got a big penalty, and that penalty could pay for your whole payroll services all year long. So there's no sense. Don't mess with the payroll taxes. Just have a professional tax service do that for you. Have that money taken out of your bank account automatically. They send it into the government. Done. Um, but the client that I'm dealing with now didn't do that. They were trying to do payroll in house, and they had a
Mm.
changeover in, oh, I have this best payroll clerk ever, and she's been working for me for 10 years, whatever. I've heard all the stories, but guess what? Sometimes payroll clerks leave. Sometimes payroll clerks get greedy. Sometimes payroll clerks steal. You never know. Somebody may get an unfortunate medical issue going on, and then you're stuck. Then you're trying to make payroll, and then you're trying to do this and that, and before you know it, you're not making payroll taxes. This particular business had not sent in payroll taxes for approximately 6 years.
Oh, wow.
So 6 years times 4 quarters per year. So we're talking, 25 quarters worth of payroll tax returns that
Wow.
and a year's worth of payroll taxes was probably about $170,000. So now you're talking 170 times, 4 or 5 years. But I say that loosely because we just started the case probably about a month or two ago, and this case is likely to go on for the better part of a year before it gets resolved. But it's all a matter of eating the elephant one bite at a time.
And it just goes to show you, like you've been saying this whole time, Joe, you are not alone. Don't think that you can handle this by yourself and think that you're an expert at this, because you might just be digging yourself a deeper hole that you're going to have trouble climbing out of. Always rely on all the professionals who have years of experience, like Joe and his wonderful team, or just anyone within your local area when you're dealing with any kind of IRS tax issues. That's one thing we can definitely take out of this episode alone. But we're actually getting to the point, Joe, where I'm going to basically ask you like a list of questions that I ask everybody who comes onto the podcast, but I'm going to tweak them a little bit for yourself, of course. My first question is simple, Joe. What's the first thing you do or think of every single day you wake up?
Oh, good question. Probably the first thing I think of is what do I need to do for my day? What's my day consist of? And
Mm-hmm.
I probably have my priorities out of line, and I'm also a religious man too. So
Mm-hmm.
I should probably thank myself for waking up that morning, first of all, and praise God along the way. But
Amen to
inherently,
that.
yeah, inherently, my to-do list is usually first on my mind, and so that'll be my answer, I guess.
No, that's a very solid answer, Joe. I can relate to that. They say that health is wealth. When you take the two words health and wealth just by themselves, what are your own personal definition of those two words in your eyes?
Another good question. Health and wealth kind of go hand in hand, and I probably need to take advantage of my own words because I preach it all the time.
Mm-hmm.
But taking time out of your day to, at least walking around the block or doing some activities along the way helps clear the mind and gets the mind and soul ready for the day.
Mm-hmm.
And so being healthy along the way can indirectly affect your business and your relationships and the
Right.
relationships that you have with all the people around you. So I believe in giving back to the community, and I think part of that is just having a good mindset as far as the health and wealth along the way.
When you think of the word ownership, Joe, what comes to mind that first pops into your head when you think of the word ownership?
Man, ownership has so many definitions. What first pops in my mind of ownership is a personal ownership in your own integrity, your own life, your own well being, and taking charge with yourself as a whole. You got
Gotcha.
to take ownership of your problems, you got to take ownership of your actions, you got to take ownership of the results of your actions. Obviously, secondarily, you have the ownership that comes to mind when it comes to outside activities, whether it's dealing with business or clients or anything else out there in the world. But the first thing that pops in my mind is ownership of your
That's
leadership.
very well said. And for everybody listening to the HFWB podcast series, they need to have that on repeat within itself, because that is very well said. I'll admit that. We're gonna go into a little bit of an either or segment as far as the questions where I'll ask you either or which one would you choose, of course. The first one is, would you rather choose loyalty or respect?
Loyalty or respect. Man, that is one of the toughest questions I've been asked in a long time. I can't choose both. No, so
You
you're
could
saying
choose either or. I mean, I've had people choose both. I mean, they both go hand in hand. But if you could pick which one, what would you choose?
you're saying people that are would I want to be more loyal to people or respectful to people or vice versa?
Vice versa. Would you want people to be loyal to you or respect you?
Um, I think if people are loyal to me, then respect follows down the road with that. So,
Hmm.
um, you know, uh, you can have people respect you as a professional, but not necessarily be loyal to you. I don't think it works vice versa. So I think if you deserve their loyalty, then respect comes secondarily automatically. So
Well said. Well said. If you had the choice, Joe, would you rather live in space or live in the ocean?
space, 100%. No. Well, I scuba dive too, but I've been an astronomy buff for ever since I was a young kid. I love astronomy. I even took an engineering astronomy class in college and along the way. So I can tell you everything about the solar system, the galaxy, the universe. So,
Okay, that's very interesting. Very interesting. Here's an interesting one for you. If would you rather live in a mansion but you can't leave the mansion, or would you rather live in a shack but be able to go wherever you want?
a shack and go wherever I want
Right.
because I can always improve upon the shack.
You can. You can. There's ways around everything.
Yeah.
What would you
Yeah.
choose?
Look, there's the IRS calling me right now.
Exclusive stuff. Exclusive stuff. Would you rather have unlimited meals at your favorite restaurant, or would you rather have unlimited first class tickets anywhere you want to go?
Oh, unlimited first class tickets anywhere I want to go.
Oh, got you. And speaking
Yeah.
of that, Joe, now that we're on this, I know you like to travel a lot. Where is the favorite place that you've traveled so far, and where is a place you would like to travel?
You know, I've done a lot of traveling in this uh, side of the planet, but I have not been to Europe, and I
Hmm.
would like to go one day. My relatives and everybody's gone over there. My daughter's gone. Everybody's gone but me, right? So I'd like to go to Europe one day. But my favorite place that I've been to that was just so relaxing was Roatan, Honduras, on a scuba diving trip for a week
Oh,
long.
wow.
The beautiful scenery down there, just relaxing in the hammocks, and then going out on a scuba dive in the afternoon. It's just amazing because it kind of goes back to your space or live under the water question. I
Right,
sometimes
right.
agree because once you go scuba diving and you're underwater, the rest of the world is no longer a problem. It's like you're down there in your own world. All the problems in the world have temporarily gone away, and you're just focusing on the micro world in front of you. So very relaxing. I encourage them to go learn to scuba dive. It doesn't take very long time.
And that kind of segues into actually my next question that I actually have for you, Joe, because I know you're one of the busiest men that I know. When you're not doing all the stuff that you're doing on a regular basis, what are some of your hobbies that you like to do that people may not know you like to do? We all know now, Joe, of course, you love scuba diving. Was there anything else that you like to do that people may not know you like to do?
Yeah, I like doing podcasts. So does that count?
Yeah, that counts for something. I'll take that. I will take that without a
Okay.
question. Got it.
One of my favorite things to do is to go kayaking in remote rivers with my best buddies. I have a
Okay.
best buddy of mine that I've known since fourth grade, and we a lot of the times go out to a lot of the different rivers in Texas, sometimes other places. But the Pecos River and the Devil's River is one of our favorite places to go. We usually get on the Pecos River and do that in about 4 to 6 days, depending on the weather. Beautiful, clear, crystal spring-fed waters, remote destinations out there, and it's the same areas that the Indian tribes traversed 10,000 years ago. And there's
Okay.
out there in Seminole Canyon State Park, there's a museum out there that has a lot of artifacts from that area. So very interesting.
Got got it. Last question for you, Joe, before we wrap everything up. If you had the opportunity, right, to go back in time and talk to yourself, say 10 years ago, what would you tell yourself? And at the same time, Joe, where do you see yourself personally in the next 10 years?
Oh, good question. What would I tell myself at a young age? Well, since I'm an old character, I would say considering investing in Amazon. You would probably do pretty well. Uh, in retrospect, I did a lot of my uh, early on work as a controller, CFO, and I learned a lot along the way. So I wouldn't do it differently, but had I known to start up a business at a very young age and have the inspiration to do it myself and start up my own CPA firm, I would have did that 30 years ago. And so it's very successful for me now. I just wish I would have done it, way back at the beginning. But at the same time, there's a lot of struggles and efforts that goes along with starting your own business, and it kind of segues back in. And not a lot of people are successful. The first 2 years of any business is a do or die time. So if you plan on starting a business, put your heart and soul into it during those first 2 years. I mean, you got to have your family time too, but it's make or break time during those first 2 years. And if you make it past those first 2 years, the chances of being very successful are very positive. So, being an entrepreneur, to answer your question, I would kind of encourage myself. And then I guess that's about it. But,
And any clear idea, Joe, where do you see yourself in the next 10
oh,
years?
10 years.
Yes.
With today's technology, I can do what I'm doing now, and have my team that works for me, and I could be anywhere in the world. I could be in Costa Rica right now doing podcasts with you and working on tax returns, and everything would be happy-go-lucky. So, I'll probably be retired in maybe 10 to 15 years. I'm 55 now, but I don't have any plans on retiring anytime soon. But I feel like I've gained quite a bit of knowledge along the way, and probably do another 10 to 15 years because I just love it so much and like advising people along the way and helping people out. And number one, I want to be here for people on a personal level. I try to put myself in their shoes and help solve their problems. And if I'm working on tax resolution, I don't want to just solve their past problems. I want to be working with them for the next 10 years. So there you go. I want to be working with those clients for the next 10 years.
There's nothing wrong with that. And speaking of that, where can people contact you, Joe, as far as to help out with any kind of IRS tax resolutions that we've been talking about this whole episode of the podcast? Because there's people who want to probably inquire as far as what we talked about and basically just get in touch with you for basically further assistance.
Yeah, I would say the easiest way is just to go to my webpage, which is HopkinsCPA.tax. Not .com, but .tax. So it's
Right.
HOPKINS CPA tax. Also, our phone number is 361 360 3855. Again, the number is 361 360 and that's kind of our group communication line. You can also send a text message through that line as well too. Be happy to talk to anybody and give them some free advice along the way.
And with that being said, for everybody listening, I mean, you can't go wrong with that. I mean, 150 plus years of IRS experience on the team. I mean, you can't go wrong with that resolving any kind of IRS tax situation that you're dealing with, most importantly. And like Joe said, I mean, you could contact him, you could contact any one of his team, and they'll definitely get you on the right track for sure as far as getting out of any debt that you're dealing with within the IRS. With that being said, Joe, I thank you so much for taking time out of your busy schedule for finally blessing us with an appearance on the HFWB podcast series. I appreciate you, my friend.
All right. Thanks, Clifton.
Yep.
Thanks for having me on board.
Yes, indeed. And for everybody listening, this is yours truly, the host, Clifton Pope, and I encourage everybody to stay healthy, wealthy, and blessed. Till next time on the HFWB podcast series.